Hey everybody, this is Bill with Money Mortgage and Crypto for the week. Wanted to go over some mortgage stuff. We've seen a really great recovery as we see here. We're coming off of these highs of all the way up 7.5%, 8% almost. This is just in the last month here. So we kind of hit some lows here last week, kind of bounced off them a little bit. We're probably I just locked a BA loan today at 5.99%. So really looking good there. We're expecting that to continue. So going into the newsletter today, you see we're down to 6.7 on conforming, 6.277 on VA. I'm actually down a little bit better than that. So these are just kind of average rates. So what's going on? The Fed's rates changed at their last meeting, or unchanged at their last meeting. This followed by news that inflation at both the consumer and the wholesale levels continued to cool in November. So remember, we've been saying for a while, we got lagging information coming in around rents, and it just takes a while for that to show that things are slowing down. So we're going to go ahead and talk about the Fed pivots and signals the rate cuts are ahead, which is kind of what has helped our about 1.25 point improvement, and then a continuous improvement on inflation. Wholesale inflation also cooled. Retail sales stronger than expected, and then the initial jobless claims at a 2-month low. So the Feds. This is kind of a chart here to kind of just show you what they are. It's kind of a blind plot that they're saying that what they think is going to happen for the future and where the target's going to be. So, it kind of pretty much about 375 to 400 basis points target. That means rates are going to be improving, maybe 4 or 5 times improvement going into 2024. So after 11 rate hikes since March of last year, the Fed once again left their benchmark at 5.25 to 5.5. Remember, that was all the way down to like a quarter back when before COVID happened. So they really had to jack up the inflation, jack up the Fed cost to slow down the economy on that. And so, what's the bottom line? At his press conference, Fed Chair Jerome Powell said, very good news that inflation has eased from its highs. So, we should be able to have a soft landing, but we don't just quite know yet. We just do know that rates are going to be dropping. I would say that, should be in the high fives, maybe by first quarter, midway of 2024. Consumer price index falling. Again, all of this stuff is showing that the money that was printed during COVID, kind of like how I explained, is like a big party, and it's a hangover time, kind of sober up, slow down on the spending, and costs should be slowing down for us. Rates will slow down at that point. The only thing we have to concern about is the pent up demand of homes being the demand increasing the price on those. So you guys can go ahead and read through this if you would like. But basically, we're sitting really good. And as we move into we're under the 200-day moving average. Things should be looking good. And a little bit about crypto on here. Things are looking good on crypto as well. I think the bears are kind of going back to the cave, and the bulls are coming out. So I'm Bill Black. This is your weekly update with the Fed's mortgage reports. Have any questions? My information is right up on the top here. Actually, it's billcblack.com. Thank you and have a great day.